Remember that in my video on Saturday about the NIO earnings stock preview, I mentioned that I buy a couple of stocks on Friday when the market's been down because of the US-China trade tensions. And one stock that I mentioned that I was buying was Huami, and Huami today is up more than 8%. And yeah, I want to tell you what is my actual price target with Huami and also why I made this purchase and also what more of due diligence have I done and what I have found out. So stay tuned for this. And as always, I already made a post about this for our patrons, so they know this information first. And by the way, we now hit 100 patrons, so this support on Patreon has been really overwhelming, as well as the likes and the support and the subscriptions on YouTube. So thank you guys, big shout outs here. We really appreciate that you gave us so much support. And as always, please give this video a quick like and subscribe to the channel to stay informed about Chinese IPOs, about Chinese stocks and updates on NIO, Huami and other stocks. So right now, as I am recording this, Huami is trading at $12.38 a share. And that's actually quite good because it has broken through intraday through this resistance of $12.26 a share. Previously, this has been a support area. I pointed that out in a couple of earlier videos. However, on Friday, with the bad news of the China-US trade tensions and with the ban on TikTok and WeChat, also Huami went down 12% because of course Huami is also collecting some privacy health data connected in the US of everybody who's wearing their wearables, for instance Xiaomi devices, but also their own brand Amazfit. So yes, of course there has been a big setback. However, I used Friday to do more due diligence in their stock and actually get a better picture of where I see it going. And actually, I can tell you that I have a price target. I think actually Huami should be priced today, as we're speaking of it, at $60 a share. Now that is a big statement to make here. However, I just really have the feeling that Huami is undervalued here, and this is why. So in this chart that I showed already in my first video about Huami, I showed you about the annual income statements and that, well, the revenues are getting higher and higher. They are usually growing at around 50% or more annual year-on-year growth rate. And also the gross profits are going up, as well as their earnings before interest and taxes. So Huami is actually a profitable company, as mentioned before, and are currently trading just slightly above a $700 million valuation, despite of having almost $300 million in cash actually that they have on their balance sheet sitting. So this valuation is really quite low, and partly possibly because of the fears that their biggest partner Xiaomi is actually, well, maybe separating from Huami, and well, they make more than 76% of their revenues through this partnership with Xiaomi. However, I've been doing a little bit of competitor benchmarking here. I looked at Fitbit, at Garmin, at Peloton, which are close competitors in a way. So Fitbit in 2019 was making 1.4 billion in sales annually and is trading at a valuation of 1.7 billion. Their net income was actually negative. So in contrast to Huami, they're actually losing money and they have a more than minus 20% EBIT margin here and are trading at a multiple of 1.19 of their current sales. And this despite the fact that they're only growing by 5.5% annually. Another competitor and manufacturer of wearables is Garmin, which is very active in the sports, in the professional sports market. And they are making more than 3.7 billion in sales. They are valued at more than 19 billion and their net income is actually positive, more than $700 million and with a healthy 20% EBIT margin and trading at a multiple of more than 5 of their annual sales, although they're only growing by 12% year on year. And then I also included Peloton because Huami actually has a similar product in their lineup, and Peloton is one of those new startups really hyped in the US markets, basically selling home devices that you can use for working out and also having these subscription models where they sell classes. So they have those monthly reoccurring revenues, so more a SaaS model like business model, which I think is actually going to be the future for Huami. So in my initial case about why I'm investing in Huami, Huami, I said I'm bullish on the healthcare market in China in general, and also that I think that with the user data and all those businesses around in the healthcare area, I think Huami will go beyond actually being a hardware provider, and they will monetize the big data that they are collecting as well as the user base through digital services that are going more into the direction of what actually Peloton is offering. So here you can see, despite only having less than 1 billion in revenues, the valuation is more than 19 billion. So quite a big multiple here. So they're trading here more than 21 times their 2019 sales, although they're still losing money. So they have minus 200 million in 2019 and a negative EBIT margin of more than minus 22%. However, yes, this company is growing fast. This is an early stage startup, growing more than 100% yearly. So this is justifying why investors are currently valuating it that high. And now in contrast to all of this, Huami, which has made 840 million in sales in 2019 and is now valued around 725 million with a net income that is actually positive, more than 80 million. So that translates into an EBIT margin of 10%. And well, yeah, they're still growing more than 50% annually. Actually, in the previous years, they were actually already growing 100% year on year. Now this is coming down a bit as they're maturing. And now they're trading at a multiple of below 1. They're trading at 0.86 times their actual sales. And so this is why I thought, well, I need to actually make a re-evaluation based on what I'm seeing, how are competitors priced in the market. And actually, I am basing it on my Huami sales estimates for 2020, and I think they will make more than 1 billion actually. If they increase just by 30%, I think they will make 1.1 billion US dollars in revenues, but that might be already on the low end because I do think they still have the potential of growing 50% this year, because also still, even though we have the RONI situation, I think this is actually one of those sectors which should be benefiting from the situation. So yeah, I was kind of working here with a conservative estimate for the 2020 sales. And my fair value that I would actually price the stock would be a 3.5 multiple, because if we look again at where competitors are priced, they are usually priced between 1 times up to 20 times multiple of the sales. And well, maybe Garmin might be a good benchmark here of a more mature company, slightly less growing than Huami, of course, but a better EBIT margin than Huami here, so more profitable, and of course with higher sales, and they are trading at a multiple of 5. So I think like if I go below that, if I go to a 3 or 3.5 multiple, that is actually quite conservative still for Huami, and is similarly benchmarked to what Garmin is doing. And that's not even including my really bullish outlook on what if Huami is turning into a second Peloton, which would be offering more of a story to the stock here in terms of the margins in the future, the growth scenarios, and also the sexiness of reoccurring revenues based on software. And so I do think my estimations here actually are quite conservative, and I would give it a fair valuation of 3.8 billion US dollars, of which I think today actually Huami should be trading. So that's obviously translating into a share price of more than 60 US dollars a share. And that's a really nice upside to what Huami is trading today. Now, why is it that investors don't get that Huami could actually be trading at this higher valuation? I think one of the reasons is the rumors around Huami and its relationship to Xiaomi, that 70 or more than 70% of their revenues are actually dependent on the partnership of this lean distribution of manufacturing products for Xiaomi, and also distributing their own products through the sales channels of Xiaomi. And then we had the news according that Eatsai Global, I mentioned it already last time, that there has been a change in registered capital for Huami, and some of the earlier investors, including some of the Xiaomi investors, have actually reduced their registered capital in Huami. However, according to my information, I did a little bit of digging here. I didn't see that Xiaomi is actually selling some of their shares in Huami. Instead, it is actually one of the co-founders of Xiaomi, Liu De, who is, well, partly on the board of Huami. He's ending this position, and he's also changing his registered capital. He, according to Huami's earnings report, he hasn't actually been owning shares. So yeah, to be frank about it, it is a big risk that in October the cooperation agreement may not be prolonged or maybe not signed in a beneficial way for Huami. In the current investor relations, I couldn't find any news on that. Also in the latest call, they didn't talk about it from the management side. However, the pure change in the registered capital, I don't read it as that Xiaomi is actually going away from Huami, and thereby I do think Xiaomi is still owning around 15% in Huami in the latest filing, so no changes so far. This may change in the future, of course. However, now there is no indication that Xiaomi is actually getting away from Huami, and thereby they would hurt themselves if they not prolong this cooperation agreement. And Xiaomi is to some extent, of course, dependent on the products from Huami. So yeah, I do think it is a risk, of course, and it should be discounted in the stock price. But even if we fully discount it, if we say, they will terminate the agreement, they won't have a replacement, so they will have 70% less of their revenues, only 30% of their revenues, then still I do think we could still argue that even then the stock price should be $1 billion more or less. So thereby I still think even in that case, in this really worst case scenarios, there should be a little bit of an upside. However, of course, in that scenarios, it's unlikely that with such bad news, the stock will actually catch up with this valuation. But anyways, just based on the facts and the financials here and what are competitors priced, only as of today and without any fancy outlook into the future, what Huami could actually become in the future, I do think this is an undervalued stock, and that's why I took the Friday plunge in the share price and I acquired more. So right now, as I mentioned in the intraday, it seems like it will actually reach this resistance again, and thereby should find some more support and possibly making its way up from there. However, with all of those uncertainties and Huami being kind of a penny stock with this low valuation, and as a Chinese stock, of course, in those time of tensions, it will reflect more on those negative trends and maybe become more volatile than other stocks. So I'm not saying we already found a bottom here, but that's impossible to time anyways. I'm just looking at whether or not this company is undervalued or not, and I just made the point that in my point of view, even if we have some conservative measures here, this company is quite undervalued, and that's why I'm taking a bigger position and just increasing it from here. So I hope you find this interesting. What do you think about Xiaomi and Huami relationship here, and also about valuation in comparison to the competitors that I've just shown? Are you taking a position in Huami, yes or no? And yeah, let me know if you think this stock is interesting to you. Thank you guys for watching, and see you tomorrow with my earnings preview catch up on NIO. I'm excited to see what's going to happen. And of course, I'm going to check whether or not my assumptions have been on the point, or whether or not I was too much off here. So thank you guys again for watching. Smash the like button and see you in the next one. Bye bye.